Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, May 17th. We got a bit of economic news to go over today, so we're just going to jump right into it. We'll start out with the Consumer Price Index, also known as the CPI. So we had a 0.1% increase for the month of March, and April is supposed to have a little bit higher at 0.3%, and it jumped up even further than that at 0.4%. A lot of this is due to increase in food and energy. But if you strip out food and energy, this is more what the Fed will look at, is what you'll get what they call the core CPI. And this is 0.1% again back in March, and increase came in at forecast at 0.2% in the month of April. So this gives us a year-over-year 12-month reading of at 2.1%. So close, basically at the Fed's target rate, but the Fed gives more weight to the PCE. They like the CPI, they look at it, but the PCE is what they look at in terms for the true interest rate. It gives a better reflection of what they're looking for in the inflation levels here. And this is, again, inflationary numbers for the consumer level here. Now let's kind of go into the housing. We got housing starts for the month of April. So back in March, we had a pretty big drop down to 1.099 million. And the forecast is supposed to come in at 1.13, and it exceeded that at 1.172 million. The building permits, again, we had another drop at 1.077 million in the month of March, and it jumped up to 1.116 million. So good numbers there, showing improvement in the housing area. We also got industrial production. As you can see, we had a contraction back in March, and the last couple reports we saw, at least with Empire State Index, it pulled back. So it's good to see that we saw that have a big jump. The forecast at 0.4%, and it jumped up, exceeded it at 0.7%. So industrial looking a little bit better in the month of April. And capacity utilization, same thing. We had a 74.8% back in March. Forecast was 75.1%. Pretty much came in line with a slightly higher than the projection of 75.4%. So overall, this is a pretty good news here for economic news. So what does that translate? Stock market is down today. So as we've been kind of saying the last couple of days, it's kind of reverse script here, where any good news is looking to be bad news. It's primarily because they're concerned about Fed raising rates, and so this might be more reason for the Fed to go ahead and raise rates this year versus later on. And they're still not quite to the point where they're ready to give that up, low interest rate environment. Also, oil, we had a nice, pretty big surge yesterday. It jumped up to $48, or actually $44.77. Now we're up to about this morning so far, we're up about at 48 even so far today. So oil shows improvement in there. And that was due yesterday. Goldman Sachs came out with a report saying that there was a drop basically in oil in the reserves out there. So they're basically under supply out there. So let's go ahead and take a look at the bond market. Yesterday we did drop about 19 basis points for the day yesterday. So again, we're still below up in this range between the 25-day moving average and the 10-day moving average, as you see the red line here. This is our ceiling here, and this is a floor here. So as you can see, we tested this morning the floor of the 25-day moving average. We are up currently about 3 basis points higher than where we left off yesterday. So rates are about the same as where we left off yesterday in this terms here. A lot of lenders did not made price worse yesterday. So most likely you'll see that in today's pricing. So I would say today's pricing is probably a little worse than what you saw yesterday morning's. Okay, folks, we do have potential to see some improvement here as the stock market kind of starts doing its thing, and then that money comes back into the bond market, which should help us out. So I think we'll get a lot of those losses back. I don't know if we'll get above the 10-day moving average, but it's possible. All right, folks, we do got a lot of data this week, and so a lot of things can happen this week. All right, have a wonderful day. Thanks so much for watching, and we'll see you guys tomorrow.